Property, stock, which is better?
This year, my focus is actually to build out on my property portfolio.
If you are younger, you have nothing much to lose, 10x will be an option that you should go for.
I would rather you go the stock route.
Ken's research can pay off 10x.
I don't have that much of a diamond hand.
See your stock price goes down, like you feel very, uneasy. You can give me a call.
What will you do?
No, yeah, I'll just scold you.
Hi everybody, welcome to another episode of Cafe Money. Over here we have Ken, we have Qiuyu, we have Benny, and today we're going to talk about stock versus property due to popular demand. People are asking us, hey, you know what? Seems like Ken have a property portfolio, Qiuyu have one, and I have one, right? But why the hell you guys always talk about stock, right? So today we're going to compare them and really see what's our preference and what is the pros and cons between property and stocks.
For property, three of us have different preference. So I'll just give you the context of it. This is going to be quite an interesting conversation.
Yep.
Qiuyu is more property.
I'm more property.
Yeah, and Benny is like half-half.
Yeah, I'm
and
okay.
Obviously, I'm more stocks, So it's going to be an interesting conversation. So Qiuyu, why do you have more property versus stocks?
I think, honestly, I was just thinking just a few weeks ago, right? This year, 2021, is going to be a year of property for me.
Okay, why?
A year of property for me because I was looking at the market trend and the prices, right? The property market in Singapore, at least, right? The prices are going up. Why are you laughing?
Okay, so you invest when the Bitcoin is 60,000, is it?
No. Okay. So, right, I see that the property prices are going up, but of course, I'm not going to buy the property at the current high price. I'm actually spending a lot of time doing a lot of research to find properties that are still priced very reasonably at like say in the 2019 price set. And of course, it takes a lot of time and effort. So for me, this year, my focus is actually to build out on my property portfolio rather than focusing on stocks.
Is it because like stock is like sideways now? That's why you focus in property?
Partly because it's sideways and partly because I am more interested in property. I enjoy the hunting and I enjoy like negotiating and talking to the agents actually. So like negotiating, talking to the agents and telling them, what about this price? What about like this?
I hate it,
and
man.
that?
Yeah.
I hate it.
So
really.
you're dating some agents, I just want to slap them. They're like
And I prefer to do the mathematical calculation for property, like in terms of like the possible rental that I can get. So what happens is this right now, as I'm talking to you right now, I'm saying like, the property prices are going up, right? I still see a lot of gap in the market that there are still pockets of properties, right?
Windows
the
of
prices,
opportunities,
right?
I guess,
the prices are still in the 2019, maybe early 2020 price point. So let's say if you go in and buy the property at that price point in this year, right? What you can do is the rental price can increase because as the property prices are going up, the rental prices are also going up. So which means, right, and then plus the interest rate is like all-time low right now. So I made a calculation, like in the event, let's say last time I could have gotten, let's say a positive cash flow of $300 per month. Now with the low interest and also because I'm buying like undervalued property and because the rental rate is going up, my positive cash flow can go up to $500.
that's not bad. It's like more than double.
Yeah, not too bad, right?
More than 60%.
Yeah. So my strategy is this. In 2021, I'm going to focus on investing in property, building up my property portfolio, get the cash flow out, stop laughing, get the cash flow, and then with that cash flow, right, I can invest in stocks in a dollar cost averaging way. Then I win in both ways.
Jump here, clap.
Very good.
Okay, I got one. It's just a very interesting thought because I'm not really a property pro person.
Yeah.
So why are properties priced in 2019 price when it's 2021? Those owners are donkeys. Why would they price it so cheap?
These people, they probably are also multiple property owners. And for them, they have already won and win and earned their fair share in the past few years when they were holding the property because they were renting it out. So to them, it's okay that they are selling at that price point. So they don't really care about that, what is the current market price. And of course, it takes some time of like negotiating with them and then, telling them that, hey, this is a good price. And sometimes they don't want to wait. They just want to let it go.
No, I think it is anecdotal sharing. I think it's good, but on a research perspective, right, property is slow reacting asset class versus stocks. You know, like how Dogecoin can from an announcement, right? But which is it's not going to happen in property, right? So because it's slow, some category has not been priced in yet. With massive amount of people like crazy over property because of low interest rate, every price go crazy. So like people are buying in, people are like going in fast, right? So you open up a wide opportunity for you to buy because right now they are like super overpriced property. They are property who haven't seen the market boom, right? And all these variance disparity open up to opportunity. I think on a research perspective, actually that's what I realize in the property market.
And you know, right, let's say right now you secure a unit that is already tenanted and the tenancy was, let's say, signed 1 or 2 years ago, the rental rate that you're getting is low, right? Because it hasn't increased. But the moment you take over and the tenancy has ended, right? If the tenant is staying, you can immediately increase your rental already.
The tenant will be pissed at you.
No, okay, think about it. If the rental right now is 2,000, you increase by $200, 2,002. How angry can they get? It's okay.
Very angry.
No, they won't be very angry. They will be okay because it will cost them more if they want to shift out.
Well, that doesn't mean they won't be angry.
Then they'll hit
but they
you.
will say,
I'll play.
They will stay, but
They will stay, but 2 years later, they're like, screw you. I'm going
Okay,
away.
so see, then you secure a longer tenure with them and say, hey, okay lah, I promise you for the next 2-3 years, I'm not going to increase your rental. So you can negotiate this way with them. I think it's fair.
Okay, so blah, blah, blah. Property market is doing well. I think Ken can argue stocks is also doing well. Correction just happened. Crypto. I mean, like, it doesn't end because of opportunity. But the question is why you choose property over stocks. You get my point? Why? Yeah, that's a real question, right? I mean, this versus conversation. So why is it a superior asset class? Because in stocks, there's also opportunity, right? Or many stocks are going to 10x, many stocks are underpriced. So the market doesn't equals to a better asset class.
I don't have that much of a diamond hand.
Oh, okay. So when you buy the property, it's less liquid. So if you don't want to diamond hand, you have to.
Yeah, I still feel very jittery when I invest in stocks, to be honest. Like very scary when you see the price go up and down, and you always have this tendency to, okay, you know what? Why not just sell it off at this point and just get a profit?
That's very honest of you. That's very honest of you.
Just take whatever it is. Don't need to be greedy or whatsoever. I just feel that I don't have that much of a diamond hand. I mean, is stock earning me money? Yes, it is, and I'm still invested in it, but I still feel more comfortable investing in property because it feels more stable for me.
But it's quite interesting because most people see liquidity as a strength.
Yep.
Right, but illiquidity is also a strength. There's this publishing of document called like the strength of illiquidity, if I'm not wrong. But it's really talking about how, because it's less liquid, right? When market corrected in stock, right, probably take longer time to correct. It take longer time to grow also, and also you won't get so itchy backside lah. Go and
I
go and
super
do your
itchy
funny
backside
stuff.
kind of person.
Honestly, if you really want to even move in property, 3 to 6 months, honestly. So in a year, right, it's only 2 transactions per unit lah. I mean, that very unit. But in stocks, a night can have like 25,000 hands, like it's exchanging, right? Yeah, that's a key differences.
At night when sometimes you see your stock price goes down, like you feel very, uneasy, you can give me a call.
What will you do?
No, I'll just scold you. Then everything will be fine.
Okay. But okay, Ken, what about you? Why is it that you are more big in stocks than property?
I'm just in it for growth. But having said that, I want to talk a little bit, focus a little bit on property too. During this whole COVID situation, I don't understand 2021, but 2020, I understand if property prices were going at high discount. Just to let you know, during 2020, when the whole COVID hit, I bought a property in UK at a massive discount, and my yield on that property, because it was so cheap, it was at 20% a year. It's nuts. That was how cheap I bought it for. Most the owners were desperate. I went and grabbed it. I couldn't not do it. I will buy into property. I'm not saying I'm not against property, but on the overall view, I would prefer to have growth over, because I want to maximize my money usage.
Yeah.
So I could grow my money in stock market and take it and buy a property.
Yeah.
I'm not too sure if that's a good strategy, but that's something that I'm more comfortable at.
Then I'm doing the reverse. I'm like taking the cash flow from the property to buy stocks.
But you know what's the difference?
What?
I'll just be richer than you. But no. I mean, I'm kidding. I mean, at the end of it, both of us will hit our millions. Just that my ride is a roller coaster ride where a lot of people would not be able to take it. And sometimes some people, when they hit at the bottom of the roller coaster, they might not have any, people there to scold them at the middle of the night. So both have its own pros and cons, and I do agree that most people should follow your method. My method is for those that are a little bit.
I mean, I guess if you have diamond hand, you can follow Ken's method.
I think more than that.
Okay.
Number one, stocks you can enter in at a smaller lot, $1,000, $10,000, you can do it. Whereas in most country, when you want to do a down payment for property, it's at 5 to 6 figures and even more. And we are talking about like first tier cities and like country like us, right? So the downside of property is it does take a little bit more to begin in the journey, and it takes your credit rating as well. Your credit score is quite important.
Yeah.
You're being able to take loan, but which means that it's also a benefit, because when it comes to then about property, right? The good news is that you have a considerably lesser risk when it comes to leverage on stock. Versus stocks as well. I will always say that because the price changed relatively slow. So I could take 100,000 to buy $1 million property, much safer than taking 100,000, right? And then to buy stocks, and then on a leverage of a 400,000, more, right? So that is the inherent advantage, lah. The biggest argument I hear online right now, where we're talking about this topic, is that why should I buy property when REITs is also paying at 4-5%? People always say this.
Yes.
Why should I buy property? Why should I buy property? It's so lame. I should just buy REITs, right? For my friends out here, right, who are not in Singapore and Hong Kong and most Southeast Asia countries, REITs is a very big asset class.
But I think in the States too.
Really? I thought States people hate REITs,
No,
Really?
States, some REITs are doing pretty well.
Oh, but not doing well, not like as an asset class that people really love to buy.
They do.
Really?
They do. Those value investors, they like to count like book value and stuff.
I see.
Yeah.
Usually, how much can REITs earn?
Like 4-5%, which is considered very solid. 6, hospital REITs like 6%.
Okay.
But what people don't understand is when it comes to property investment, right? And if you take a leverage, say a 90% loan, right? Someone is paying off your mortgage. So your loan is being paid off, which means if a property remains at $1 million over the next 30 years, zero growth, which is impossible, let's say zero growth, you make everything else from the depth because your tenant is kind of indirectly paying off your mortgage.
Okay, let me simplify what Benny just said. You need to pay back the bank a monthly amount of money, and this is called mortgage. So there's two things that affect the mortgage price, which is the interest rates and the principal. So what Benny's talking about is the principal. We call that forced savings.
Yeah, if you are staying there, but if the tenant is paying off, it's profit. It's not saving, right? Because the tenant is paying off your loan, right? So a property that remains $1 million over the next 30 years, you still gain.
Yep.
And that's the inherent value at low risk perspective.
And that's why a lot of people, I think, especially the older generation, especially my mom, love to say that, when you buy a property, even though you're staying in it, you are paying for the mortgage every month. It is like a forced savings.
The reason why I decided to go more into stocks is that I'm pretty good at research and kind of like because I do entrepreneurship, so I kind of understand how businesses run and how successful businesses run to scale from proof of concept and scaling onwards.
Yeah.
So that is good for me. For me, a property is just four walls and a toilet. Yeah, some nice toilets, some not nice toilets.
Yes. Ken's research can pay off 10x in stocks. And in last year, if you were to invest during the stock market crash, you would have easily made 60% to 1x. That means 2x your portfolio, right?
Yeah.
But it's very hard for property to 10x your value in 5 years or 10 years.
Yep.
However, if you are comfortable with 15 to 20% return a year, property is a very good choice.
15 to 20% a year?
I know.
Yes.
The
Property?
question-
Yes.
You see, the question is about to come, right? Because most people only factor in capital appreciation. So they thought, but the capital appreciation is only at 2% a year, 3%. How do you come up with that 20%? How do you come up with 15%? Hey, let's not forget, you are this is a very important math, which is huge that everybody need to understand. When my property price from $1 million grow to 1.1 million, if I'm only putting $100,000, my money grow by double. Because I didn't put $1 million for it to grow by 100,000. I put 100,000
to grow by
another 100,000 because I'm on leverage.
So basically, a property that's $1 million and it's now worth $1.1 million.
Yep.
People think it grew
10%.
10%. But the truth is, because a property you put a down payment on 100,000, and because the property grew by 100,000, it's literally a
100% growth.
100% growth. It's actually 100% growth.
Of your
It's
capital
actually 100%
injected,
growth.
right? Yeah.
And not forgetting the principal pay down by your tenant.
yeah.
Yeah, and in rare cases, it's positive cash flow. So
And paying a real estate agent their fees, god damn it.
yeah, and a very expensive fee, right? But you still will be good at end up. Let's just be very conservative, like at least 10 to 15%.
So if it's not 100% over the course of say 4 years, right, it will be at least 80% after minusing all the expenses. I mean, we are not even counting the principal that you win from your tenant. So divide by 4 years, 20% easy, what?
Suddenly I think I laugh at you. I'm kind of
Don't laugh
like
at me, okay? I know what I'm doing.
No, but the thing is, it is because also of the stability of property that allows me to go all in stock. So a lot of people say, Benny, why don't you buy safer stocks? You know, why don't you go for S&P 500? I don't think it's anything wrong. I think it's perfect, right? But why do I need to do that
The growth will be slower.
when my property is already going to secure my retirement?
Yeah,
I just had to focus on stocks, right?
So just now you were talking about liquidity, right?
Yeah.
I think that is a very big point because recently I was talking to this particular person and he also agrees that the reason why more people are successful probably in property investment is because of this illiquidity.
Illiquidity. Yeah.
Okay? Because imagine, right, every day you can see the property price go up, down, and you have the ability to buy, sell, then you will also end up like stocks and you will like probably sell too early or hold for too long. Yeah.
I think character plays a big part. Stephen Graffin, whatever. Yeah. And like people like my elder brother, like my personal elder brother, right? They can practice dollar cost averaging by the book. You know, like they literally say, you know what, I'm going to take like $1,000, $2,000 every month, whether the price is up or down, right? You know, kudos to them, man. But for me, right, when you see something going like so high or like something is dropping, it's so hard to be so disciplined to just, mathematics speak so. As long as I dollar cost average, you'll make money, right? So I think if you are someone who can have the discipline, like I wasn't even say Qiuyu is very disciplined. She presents herself like, you know, like no, but she actually quite disciplined also. Just that she have itchy hands. She like to
I do have itchy hands.
Do action. You know, she like to take action position. But other than that, I think if you have that mindset of like understanding a game plan and sticking to it, right, you'll do very well in oh no. Let me share an actual example.
Okay, say it.
Yeah, what happened?
Okay, it's a donkey example by me and Qiuyu. Okay, but I'll rather come clean with my audience over here. Right? So
I had a donkey example.
you have a super big donkey example. Yeah. So,
What did I do?
What happened?
So 3 of us enter into AMC at the same time.
Okay, I know what happened.
Yeah.
Okay, I
Just
forgot about that.
1 week before AMC got into 4-5x, right? It's suddenly boomed to 40-50. Just 1 week before. In a random, boring week, we have a conversation, Qiuyu and I said, you know what? Let's just sell it to buy something else.
No, because at that point in time, Tesla price was also at a quite low.
It's dropping.
Quite low point. Then we were like thinking, why not do something about the AMC?
Yeah, this is not doing well. Let's just sell it and just
put the money into Tesla.
Yeah. And we did it. And 1 week later, Shazam, 4x. Yeah. So see, like people like us are always take action position, right? And sometimes it can be detrimental. Like time in market and just letting market work its course, especially for like Tesla, right? Actually, it's more important than just keep looking at short-term
I
perspective.
forgot about this.
Actually, on this note, it's very important, you know. I hear Kevin, I hear Ken Tang. There's a very familiar conversation that a lot of people don't understand, which is called the price target. Targeted price. Actually, this is a very big conversation. If you're a beginner investor, you should know, which means that at what price of the stock this company is going to normalize, at what market cap and what profit, right? Because if you can buy into that future, right, then you will be more secure. So a lot of people is looking at, is it too high, too low? Is it going to drop? Is it going to grow? Which is very fundamentally not sound. Even, I'll be honest that I was doing stocks around for like 2-3 years. I heard of a lot of like price target, but I didn't even go and sit down to really research and understand what price am I confident of a company at its growth, right? I think that's such an important conversation.
I think it's important because most people, if Benny is talking about calculating price, so you need to calculate like future cash flow of the company, future revenue, and you actually divide it by the amount of years. You call it the DCF model or whatever model you have out there. You kind of like, you know what's the future price, you got to discount it back to today and you see if it's cheap or not. I mean, this is the best.
And even if you're not even discounting back to today, at least you should know the future of the company before you know what are you doing when you're buying into a stock. It's something that people don't talk about because all they care about is it too high now or is it too low later, right? But it doesn't matter because if you were to have diamond hands, right, and just really hold it there, you would have made a lot better like us. Look at our AMC donkey move. Like,
three of us entered the same position. I made money, so I mean, I didn't. I could have made more, but make money is make money. The thing about property versus stocks, property is a good game for most people because it's more stable and you could take the cash flow to invest into stocks. For those who, for whatever situation you are in, you are comfortable with the ride, you did your research. You know, I know a lot of audience, they spend hours, like or even months and years studying about stock. I mean, you can see what I did for Tesla. If you do that for any other stock that you love a lot, I would rather you go the stock route because some people just don't have interest in stocks, and you cannot force yourself to have interest in stocks. Like Qiuyu, she loves property, she loves interacting with people. I
not really. Sometimes I get really, really angry and frustrated with the agents, but I like the excitement, like, going down to view other people's place. It's just very fun for me.
Well, the downside about property, because we are talking about stocks versus property, right? Yeah. Because I'm in both, right? The downside about property is that administration nightmare. We're talking about loan approval, sign loan, mini tenant, tenancy agreement.
This is a Benny's nightmare because his admin is
hate admin. I hate admin to the core, right? But stocks, you got an account, you pull through the tough part about creating an account.
Yeah, and that's it.
End of story. You get it, right? Put money in, invest. And also, if you're not touching option per se, right, but you'll be just very simple game plan, right, and you have to really watch out for that. And of course, if you are younger, you have nothing much to lose. 10x would be an option that you should go for. And you're slightly a little bit older, right? I think you will have more credit score. You have more ability to take loans. So that's where property becomes a kind of a good option to consider. But when you're very young or you have a messy credit score, you can't even really touch property unless you find very specific cash property deal like Ken. But it's also a very tough find. So that's the thing to me. I will never touch property without leverage.
I see.
Because
makes sense.
I would just buy stocks. If it's without leverage, I don't have the multiplier effect of leverage, right? I just buy stocks. It's much easier.
So one thing about the property game, it's a little bit unfair because it has you need to have a network. I believe if network is like super underrated in property game. If you have the right network, good deals will come your way.
Let's just be open to say this because a lot of people think that we are living in a world of open market.
Yes,
but we are truly not. I can say this is because like even for my residential deal, I will not disclose much, right? They are what consumer get and what you get when you know the who's who.
Yes,
that's the honest truth.
For example, like my UK property. The reason why I got the deal is that the guy who is helping me get the deal, he called me up, and because he knows that I'm more cash rich and I could close the deal within 3 days, a property deal within 3 days. So I told him, I could close the deal in 3 days, and because of that, I got the property at it's quite a high yield.
See, for you is you are ready, you get a better price. For me is I know someone, and I bought it for one property. I bought it 30,000 cheaper than the neighbor. So I win on the get-go. Get-go. And the truth is that a lot of people do not understand. I know Ken before Tesla is so advanced, the amount of connection he built to get his property deals takes, I think, years of connection, of knowing people, of trial and error, right? To get to a favorable position now whereby people are feeding him deal. And for me to get connection with developers and connection, right, it takes a while. So access is not about like asking a friend for access, right? Is you really need to build that connection, right? So that you have a better advantage over the rest. But in stocks, you wouldn't have to go so far though.
Yeah.
Because anybody can buy Tesla stocks, Shopee, C Limited. Anybody can buy anything, right? Okay, you can buy a S&P 500. I mean, you can buy, like, there's no like connection to buy S&P 500. Don't talk about pre-IPO shares. Yes. We just talk about stocks market in general, right? It doesn't take
And I would say on that, right, that's why it's also very important you build like a good relationship with the agent. Let's say you're starting out, you do not have any like access or rich friends who can give you those backdoor access to certain good discount, or you don't have anybody who will call you out when there is a good discount, right? So what you do is you have to build good relationship with the agents who is helping you.
Yeah, see, that's the thing. There's so many moving parts. You buy stocks.
Yeah, a lot of hard work,
Yeah, it's only buy and done.
Just to be clear, 20% a year, that means in 5 years you double your money,
I double my money.
Okay, cool.
My current portfolio.
How you want to switch or not?
No,
I will probably
5 years,
my money.
5 years doubling my money right now in my portfolio of multiple properties, right, is still not as fast as my crypto and stocks combined.
Yep.
It's actually not as fast, but it's something that I can live with for retirement. So for me, my conclusion for this topic is very simple. Number one, I will only touch property if there's leverage, because there's no point putting the same money if I can have bigger potential in stocks. How about Qiuyu and Ken?
Because I don't have diamond hands.
So for you, it's more property.
Yeah, so for me, it's like property. Put in the hard work, find the property, the right one, and just buy it and just let it roll. And I'm happy with the 15-20% year on year.
Cool. By the way, just clarify, it's not capital appreciation. Somebody's going to comment, nobody's grow. But anyway, just watch the whole video again. Okay, good. Ken?
Yeah, and for me, it's more stocks. Stocks is more easy accessible. It's more liquid for me. I know how to move my money. I'm one of those that know how to move my money around when shit happens. So I need a liquid investment. I also like to invest in things that changes the world.
Yes.
So it's just a different mindset.
And more importantly, guys, I want you to type in the comment right now. Are you team stocks or team property? And why stocks and why property? Give us all the insights, right? And share with us. We do read these comments, by the way. We refresh them. We type in the newest and we just go in every few hours to see what are the comments. So please type it down. We appreciate it a lot. And thanks for making this a community with that. Thank you guys and see you on the next episode. Cheers.